We're still investing. Vantage Point is a large fund. You know, we're in that billion-dollar dedicated to clean tech kind of genre, and there aren't that many of us out there. What we came to the conclusion was, given those types of markets and how big they were, what's the profile of a company who, when is successful, it serves those markets well?
Hi, this is Matt Bowman with Vader News, and I'm here with Mark Vandenberg, Managing Partner at Vantage Point Venture Partners. Mark, thanks for joining us.
Sure, Matt. Nice to see you again.
So, Mark, you joined Vantage Point in 2006 from Venrock, and you've focused pretty much exclusively on green tech companies for the last 3 years. Is that accurate?
That is correct.
So, let's talk first of all about money. Are you actively investing in green tech companies?
We are.
And what are you looking for? What kind of entrepreneurs and what kind of companies? What sectors?
That's great. Great question. Well, first of all, we've concluded the world is not coming to an end. 6 months ago, I might have had a different answer, but we've concluded that the world is still going to continue.
That's good news.
Yeah, we're really excited by it. We've got a broad portfolio, so we've invested in everything from fuels to biomaterials to transportation, energy efficiency, energy storage, solar, renewables, etc. And so we've had a taste now of the entire landscape. And there isn't a sector there that we don't like, but occasionally we favor other sectors. And currently, I think we really enjoy the energy storage space and consistently think that energy efficiency is going to be an ever more increasing important aspect of achieving our future energy goals, whether they be carbon-based or just energy independence-based. So energy efficiency is a big area for us. Lots of subsectors under energy efficiency. The most obvious to many people is lighting, but there's also issues around HVAC and issues around green building. So
one thing that's changing is that's different between green tech and other, sort of traditional sectors for venture capital is the amount of capitalization that's needed.
Is it bigger?
That's what I've heard.
Yeah.
The price tag's a little bit higher, and time to market, time of commercialization is also longer. So how is this affecting the venture landscape? Are two guys in a garage, is this still the model?
The model's changed. The model's changed. Two guys in a garage still works, but there's a good news, bad news story here. Good news is we're not worried about the markets. Right? The two guys in the garage and a couple of servers writing some code, you might have in 1988, 89, 90, 91 been worried about what market they were going to serve and how they were going to serve it. Today, we know the global energy markets, the global transportation markets, the global fuel markets, lighting, storage, those markets are huge. They're vastly much larger than the IT markets. So, you got that solved. The issues are, how do you build a company that serves that market at such a place in terms of its own size that it can be considered attractive for an exit opportunity? So, we're still investing. Vantage Point is a large fund. We're in that billion-dollar dedicated to clean tech kind of genre, and there aren't that many of us out there. What we came to the conclusion was, given those types of markets and how big they were, what's the profile of a company who, when is successful, it serves those markets well? How many people does it have? What's its revenue like? What's its global footprint? How much capital does it need? How many factories does it need? What's the capital efficiency? What's the return on invested capital? And when you draw those attributes and you put them in a SWOT analysis, it says, if I have to build that company, what do I need to start with to get to that end game? And what steps along the way do I need to achieve in terms of capitalization to get there? And when you do that, it says, if you want to be a player building those companies, you better have a decent pile of capital to work with. You better take a look at each sector and analyze the companies that are participating in that sector and do a ton of homework to make sure that the one or two that you're going to back are the one or two that are going to be capable of absorbing that much capital and doing the right things with it. So you'll notice in our portfolio, we don't have 50, 60, 70 companies. We've got less than half that amount. And we've got 4 solar companies and 4 lighting companies, and I think been very selective, so that when we find the one or two in each of those subsectors that are right, we can pile money in, make sure that they're successful.
Mark, last question. You, as a venture capitalist, are making decisions and judgment calls all the time that will have a big impact on society for the next few decades, perhaps for the next century. what are some of the values?
I don't like that kind of pressure.
It's a lot on your shoulders, right? How do you see the future? What sort of a society would you like to move us towards?
That's a good question. I get into this debate with one of my two sons, who's the first of my three kids. It's a teenager who's a lot more clairvoyant about what this stuff should do than I think I am at times. With the development of Brazil, Russia, India, and China, and other developing nations, global competition, our lifestyle, our Western form of lifestyle, is going to be under economic scrutiny. We are the largest consumer in the world, but we're, quickly losing our manufacturing edge. What clean tech can do, which is often overlooked, is from an energy management perspective, an energy production cost perspective. The simplest and most easy argument I can make about it is, if the feedstock for your energy is $0, then once the depreciation of the capital has been achieved, then why isn't energy free? So in the future, energy should be free, flat out. Now, operation and maintenance costs could exist, and you have some, but as the developing nations have a higher and a rising living standard, and therefore a demand for a middle-class lifestyle, a Western lifestyle, and therefore a demand for wages that support that lifestyle, the wage imbalance between the developing world that manufactures and the developed world that consumes will shrink. At some point, it will have shrunk so much that the single biggest line item on a global Fortune 50 company may be energy and management of energy. Not just electricity they buy to turn their lights on, but their feedstocks to make the chemicals that go into their products, the recycling requirement, the transportation of their product from the point of manufacture to the point of consumption. So if you holistically look at energy as the next biggest cost driver for global competitiveness, and it exceeds and sort of takes over for the labor as the cost, it says then that the country that manages its resources, its natural resources and its energy, the most efficiently could and should be the most competitive. And if it is the most competitive, and it also happens to be the largest consumer, then all of the jobs and all of the production and all of the resources that go into the production could be domestic. And so when I look out 30 years, and I think about my kids graduating from college and needing to go find work, I think most college graduates are looking at the Peace Corps right now. I think we can evolve a Western civilization to one where the cost of human capital is not the first line item we look at when we're trying to figure out where to do our production. So I look at it that way.
Great. Well, Mark,
I'd like to save the planet too and mitigate CO2. But from the venture capital perspective, that seems like a very compelling argument for me.
Yep. Awesome. Well, Mark, thank you very much. I appreciate your time.
Welcome.
I'm Matt Bowman for Vader News.